Good evening, and here's where things stand in the metals market heading into today's session. Gold is ticking a little higher this morning, while silver is pulling back as traders start to unwind part of the rally we saw last week following the jobs report. At the same time, Treasury yields, the dollar, and crude oil are all pushing higher, and that's putting some pressure on the metals. Right now, spot gold is sitting around 41.69 an ounce, up about 0.1%. Silver, on the other hand, is trading near 61.40, down about 1% on the day. Gold spent the early session bouncing between about 41.16 and 41.69, so it's holding above that 4100 level, but it hasn't been able to punch through resistance up around 4200, which has capped this recent bounce. Silver had a wider early range, moving between about 60 and 62.29, and it's giving back some of last week's gains after it couldn't hold above the $62 mark. Let's talk about what's driving this. Last Thursday's jobs report is still shaping the picture for gold, but the reaction isn't quite as strong as it was right after the numbers came out. Payrolls rose by 57,000 in June, and unemployment held steady at 4.2%. But April and May were revised down by a combined 74,000 jobs. That softer hiring trend has taken some pressure off the Fed to hike rates anytime soon, which is generally good for gold. But at the same time, the 10-year Treasury yield climbed back to about 4.5%, and the dollar index firmed up near just under 101. So you've got softer labor data supporting gold on one hand, but higher yields and a stronger dollar keeping a lid on new buying, especially with the Fed's meeting minutes coming out tomorrow. Now, over in the oil market, there's some geopolitical noise worth mentioning. The situation in the Strait of Hormuz is still one of open shipping traffic, but with renewed risk of attacks, it's not a full shutdown of the choke point. Oil prices jumped more than 1.5% in early trading after a tanker was hit by a projectile near Oman. Brent crude is trading around $72.60, and WTI is near $69. But that spike in oil is being kept in check by recovering exports out of the Gulf, OPEC Plus continuing to add supply, and a physical oil market that's generally well supplied. For gold, this just adds a small geopolitical bid in the background. But the real story right now is still the dollar and yields reacting to the jobs data and Fed expectations. Looking ahead, keep an eye on tomorrow's Fed minutes, the CPI inflation report coming out on July 14th, and any further incidents around the Strait of Hormuz. If the Fed minutes come across hawkish, that's going to test this recent bounce in gold. But if we get a softer inflation print, that could give the metals a cleaner path higher. Quick rundown on the broader markets. WTI crude is firmer around $69 a barrel, Brent is near 72.60, the dollar index is firmer, and the 10-year Treasury yield is sitting right around that 4.5% level. Now let's get into the technical picture. For gold, the bull's next target is pushing prices back above the 4,200 to 4,260 resistance zone. If that holds, the next stops higher would be 4,370 and then 4,500. On the downside, the bears want to see a break below 40,091. And if that gives way, we could see 40,000 and then 39.59. So resistance sits at 4,200, then 4,260, while support is at 40,091, then 40,000. For silver, the bulls need to reclaim the 61.33 to 62.81 range. Get above that, and the next targets are $64 and then $65. The bears, meanwhile, are looking for a break below $60.69, which opens the door to $59 and then $58. So resistance is at 61.33 and then 62.81, with support at $60.69 and then $59. That's the setup heading into today's session. We'll keep watching how yields, the dollar, and tomorrow's Fed minutes play out from here.